We are turning questions into answers. This is a simple VAT question. Touches on a few basics from Tax 2 and Tax 3. It is relevant for both years. Let us get started. We'll read through the scenario, analyze our required, and then we'll start to integrate our scenario. Okay, so I'll read it first. So Edgar Ltd manufactures clothing for the local and export market. Edgar Ltd is a registered vendor for the purposes of the VAT Act. The following amounts, which include VAT where applicable, have been extracted from the accounting records of the company. In respect of its 2-month VAT period, ended on the 31st of March 2020. Edgar makes 100% taxable supplies. Then we're given our list of income and our list of expenditure, are required. Calculate the VAT payable or refundable to Edgar Ltd for the VAT period ended 31st March 2020. Work to the nearest rand. You can assume that all entities that Edgar transacts with are registered VAT vendors unless stated otherwise. Okay, we will begin by looking at our mark allocation. Okay, we are told it's for 5 marks. We can start to assume 5 times 1.5 minutes. Okay, so this is more or less how much time you have. Okay, you always want to round down instead of rounding up and thinking you have way too much time instead of the time you actually have. Okay, we are told to calculate, meaning they want to see more numbers than words. Okay, numbers of course justified by words, but they want to see more numbers. Is VAT either payable or refundable for the bad period? This is important. 31st March 2020, work to nearest rand. Okay, so let us start with our scenario. We are told Edgar Ltd manufactures for both local and the export market. So anything that is local, if something is local, it is standard rated. But also, what are they selling? They are selling clothing, right? And most clothing is, again, standard rated. Something is standard rated, your VAT is at either 14%, depending on when VAT was charged, but in this question, it is just 15%. Okay? Versus export market, because they sell to both. Our export market has 0 rated supplies. Therefore, VAT is at 0%. Very important. Edgar is a registered vendor for the purposes of the VAT Act. If they are a registered vendor, what does that mean for us? Okay, a vendor can claim VAT. Okay, I want you to think of if you are going to a supermarket, for instance, you are paying VAT, so you still have VAT consequences because you are paying VAT for your purchases. But if you are a vendor, you can then claim back what you paid in VAT. Okay, so non-VAT vendors like us consumers just pay VAT. But our vendors specifically can thus claim their input VAT back from SARS. Okay, so have been extracted from the accounting records of the company in respect of its 2-month VAT period ended 31st March 2020. Okay, so it's just cover VAT periods just for revision purposes. So our 2-month VAT period consists of number 1, category A, meaning up until odd category A, odd months. And our odd months such as our Jan, Feb, March, and so on. And then we've got our category B, which is again 2-month VAT period, but ends on even months. So like your Feb, April, and so on. Okay, so this is basically year of assessments in inverted commas, but for the VAT period. Okay, ended 31st March 2020. And another important thing we are told is that Edgar makes 100% taxable supplies. Why is that important? Okay, if he makes 100% taxable supplies tells us the percentage of our taxable supplies, tells us our percentage of import VAT that we can claim. Okay, this also links to a few output VAT items. Okay, not all of them, so some specific output VAT items, such as our fringe benefits. Okay, which VATs can be then apportioned. So every time you think of taxable supplies, we are taking our amount, or our cost rather, let's say cost. Okay, we are saying cost multiplied by our VAT percentage, which is 15 over 115, because we are told it's inclusive of VAT. Okay, then multiplied by your percentage. In this case, it's 100%. But if taxable supplies was, for instance, 80%, you would multiply it by 80% to determine your input VAT. Yes? Yes. Okay, so let's just briefly go through this formula. Okay, I will link it in the video above. Okay, how we can calculate simple VAT. Okay, but I'll just go through it very briefly. If we are looking for VAT, we say what are we looking for? And this is our VAT at our 15%. And how much do we currently have? We have VAT inclusive. So we are told all amounts are inclusive of VAT. The following amounts which include VAT. There we go. Let's find a nice highlighter to highlight that for us. All amounts include VAT where applicable. Okay, so 15%. So that highlighter highlighted everything. Let's go back. Okay, all amounts which include VAT where applicable. Perfect. Okay, so going back to our formula, if we are saying amounts are inclusive of VAT, we're saying VAT is what we want, which is at 15, over what we given, amounts that are inclusive of VAT. Okay, inclusive. So VAT plus our cost. Cost plus VAT. Yes? Perfect. Or the selling price plus VAT. Either way, the amount is inclusive of VAT. Whatever the amount is, amount plus VAT will get you your total that you buy for. Yes? Perfect. So let us begin. I like to begin these questions by telling the marker what to expect. So you'll begin by saying, assume that output VAT tax is positive and input VAT tax is negative. Okay, so as you put in your signs, you are not letting the marker assume. You have already told them what is positive and what is negative, and they can just simply follow. Okay, so let us begin. We are told to calculate. The easiest way to show that we are calculating this is to use a table rather than using words. Okay, so a table will simplify it for us and also make it easier to understand for our marker. So we've got our description, our reason, and our amount. Again, find a method that works for you. Okay, we'll start with the first one. We are told we have local sales, so this is where we're at. Sorry, still using the highlighter there. We're told we have local sales of goods. Okay, so local sale of goods. Perfect. Local sale of goods, okay. We said again, anything that is local, going back to the very beginning, local is usually standard rated. But what is sold locally? We said clothing is sold locally. And clothing is standard rated at a rate of 15%. So when you're trying to calculate VATs for that, we're going to say our local sale of clothing which is standard rated. VAT, sorry about that. Input VAT tax can be claimed at 15%. Okay, we have an amount of 216,600 multiplied by 15, because we're looking for VAT, over 115. All amounts are inclusive of VAT. Let's put that into our calculators. Okay, multiplied by 15 divided by 115, and you should get an amount of 28252. Okay, perfect. Number 2, we then have export sales, meaning we are selling outside South Africa. This is 0 rated supply. Something is 0 rated supply, you can claim input VAT at 0%. Therefore, you can say this, or you can just write 0, completely up to you. 259,920 multiplied by 0% would give you 0. Does that make sense? If you have questions, feel free to type it in the comment section below, and we'll try our best to answer all the questions. Okay, number 3, this is where we're at now. We're told we have interest on overdue customer account. Okay, interest on overdue customer accounts. Again, what is interest? Interest is a financial service. So what does that mean? If something is a financial service, it is an exempt supply. Exempt supply is not a taxable supply, thus we have no VAT consequences. And you can put nil for that. Okay? Then we have expenditure. So we're done with our income now. So let's just go back and double check. So income is usually output VAT. And again, what did we say about output VAT? All positive, as we told our marker. So let's go back. Assume output VAT is positive. I'm going to highlight that nicely for us. Output VAT is positive. Okay, let us go to expenditure. Expenditure is input VAT in most cases. Okay, and we said input VAT is, find our highlighter, input VAT is negative. Okay, and input VAT is negative. So just to double check our signs are correct, this is positive 28,000, positive 0, positive 0. Okay, we are still together. Yes, perfect. Okay, we then have salaries and wages. Sorry about that, still in highlighter mode. Salaries and wages. And wages. This is supposed to be input VAT because it's money we are paying coming out of us. Okay, but this is specifically excluded from the definition of an enterprise. So what does this mean? Because the definition of an enterprise is required to be met for VAT to be effective, this will then mean that there is no VAT consequences. Okay, therefore our VAT is equal to 0. Number 5, bank charges. This is the one they like to trick you on. Okay, they ask about interest and then they ask about bank charges. So bank charges is a standard rated supply because it's not a financial service. It's not interest. It's not interest. It's not interest. Okay, so it is a standard rated supply. Very, very different to interest. Okay, so we get bank charges on, for example, overdue accounts, but interest on the other hand it's a financial service. Okay, it's how money is being made, either for interest income or interest expense. But bank charges, it is fees. Okay, so it's a standard rated supply. So for example, if you are charging fees for instance, for if you're providing a service such as giving food, you have food fees or service fees. This is still a standard rated supply. It is a fee. So standard rated supply, therefore, input VAT slash tax can be claimed. At what rate? 15%. Okay, we have an amount of 228 multiplied by 15 over 115. 115, this is 228 multiplied by 15 divided by 115, and this would give you an amount of 30. Again, let us remember our signs, negative 30, because it is input VATs. We said all input VATs will be negative for the purpose of this question. Okay, and lastly, number 6. Again, if you have any questions, just feel free to leave them in the comment section below. Number 6. We are told Edgar had, so this is where we are right now. Edgar Ltd gave the use of a motor vehicle, a motor car as defined. So here they were very nice to tell you it is already a motor car as defined to an employee on the 1st of Feb 2020. The vehicle has not been used by any other person before this date. All costs related to the vehicle are borne by Edgar. Now we're talking about further deductions. Respect of except, keyword, for repairs and maintenance, which is borne by the employee. So this is a special reduction that happens. If repairs and maintenance are borne by the employee, a monthly amount of 85 Rand will be removed. Okay, so let's go back from your determined value. So let us go back. How do we work this out? What is this? An employer, I'm just going to write it at the bottom. An employer gives an employee a benefit slash asset. This triggers fringe benefits. Okay? Fringe benefits is an output supply. Output VAT supply. Either way, it's output. Okay? Output tax. Output VAT. Okay? Okay? Output VATs, another thing we said before about taxable supplies being at 100, it could be possibly apportioned depending on our percentage of taxable supplies. Output VAT again on a fringe benefit. Another nice thing to remember for theory questions, it is a deemed supply. Okay. So this starts. So we can say use of motor vehicle. Okay, use of motor vehicle. This we know is a motor car is defined. Key elements there. What is the cost of this motor car? It is, so we're going to start here, deemed supply. Output VAT can be paid at 15%. Not exactly 15% because we have a working for it, can be paid. Let's leave it there. What is the working for fringe benefits? We say cost of 60,000 always excludes VAT, whether the amount is inclusive of VAT or exclusive of VAT. So always excludes VAT. Let's grab a nice color. Times 100 over 115. Okay, we are told it is this clear? So choose white again. Let's stick to white, okay? So multiplied by 15, sorry about that. We are excluding VAT. Okay, so multiplied by 100 over 115. Okay, but again, we're told it's a motor car. What happens when it's a motor car? We multiply the amount exclusive of VAT by its percentage, 0.3%. This percentage is very important. It's not just 0.3, it's 0.3%. Okay, all of this has brackets around it because it is then subtracted or reduced by 85 Rand. Remember we said because the employee pays for repairs and maintenance, we can reduce 85 Rand per month of their fringe benefit. Okay, so minus 85 Rand. 85 Rand. Okay, minus 85 Rand. This again, we can create a bigger bracket around it and we can say how much is our taxable supplies. Our taxable supplies is 100%, as we are told here. Taxable supplies are 100% multiplied by the amount exclusive of VAT, which is, the VAT component of it. We already excluded VAT. The VAT component, which is 15 over 115, because it's inclusive of VAT, multiplied by 2, because everything is per month. We're told 85 Rand per month. Use of the motor vehicle. The employer uses it from the 1st of Feb 2020. You can draw a little timeline for yourself, all the way until 31st of March 2020. 28 Feb. This is 1 month. 1 month, and this is our 2nd month. Okay, so there's our 2 over there. Okay, so for 2 months the person is getting this use of the motor vehicle. Okay, but this is not the end. We then have to calculate this. Put this into our calculator and come up with a figure. So we're going to say 60,000 our cost multiplied by 100 divided by 115 multiplied by 0.3% to get us an amount of 156. Oh, I'm thinking big numbers. Okay, and this amount is then reduced by 85 Rand to get us 71. Yes. This amount is then times by 100% and then times again by 15 divided by 115 and then multiplied by 2 to get us an amount of 19 Rand. Okay, let us remember, is this input VAT or output VAT? Yes, it's an expenditure because your employer is paying for you to use their company car, but it is a deemed supply. It is deemed to be output VAT. Therefore, it is a plus 19 Rand. Okay, we will then add up everything we've worked out so far. Because the question asks, what is the VAT payable or refundable? So we need to find the total of these figures. Okay, so we have 28,252 plus, we have 0 there, 0 there, 0 there as well. We have 30 over there, negative 30, negative, so minus 30. Okay, And then, so just double check, 0, 0, 0, 0, 0, 30, and we've got that 19 there, plus 19, to get us an amount of 28,241. This is a positive amount, therefore we can conclude that our VAT is payable to SARS. An amount of R28241. Okay. Again, if you have any questions, please jot them down in the comment section. We'll do our best to get back to you as soon as possible. But jot down your questions. You could be helping somebody else with the exact same question as well. But jot down your question below, please. Please remember to hit that like button, that subscribe button, and see you in the next video.